following is a technical analysis on Palantir Technologies, a company of the technology sector and software infrastructure here off the weekly interval. And the weekly, monthly, much larger pictures typically tend to dominate the underlying aspects of the inner realms of the time intervals, and they encompass the much broader, larger perspective. We have confirmed RSI negative divergence here on a much larger scale, where the moving average convergence in the oscillator are coming in tune with key inflection points on a potential crossover and an avert of that crossover. We're at a significant turning point where you have the 50 exponential moving average around that $12 range, $12.30 range. And again, just a big 50 weekly moving average inflection zone that must be defended there on the much larger, broader scale. And with just huge volume at price profile around this range, where you have the vast majority buying within this $15 zone range, with a pretty sizable gap down below, where this would, again, just be a crucial turning point and key inflection point that must be defended heavily when I zoom in on the, well as the daily intervals. Biggest turning point for the longer term trend change and or deflection and defense of some of these major price support levels. Zooming into the daily interval, and we'll get out some key inflection points where we have this minor primary uptrend line here off the May 2023 reactionary lows, and you've got a more than enough validation with a reactionary low there, final solidified breakdown, and a back test right amongst the 50% fibs retracement, 1725 price resistance called dual support, and it was rejected impulsively right off that key inflection point, breaking down the minor primary uptrend line here. And that is as definitive as a sell signal as you can possibly get there on the daily interval, undercutting the 50 exponential and 50-day moving average, honing into that next target at 1441 price support. And I will have to say that the 1441 and 1365 price support zones are really minor price support levels. Do not underestimate a full throttle undercut and crash, puncturing both support levels simultaneously there on a move down to 1247 price support. And that is a very significant price support, correlating with the primary reactionary downtrend line there off the January 2021 reactionary highs. And that is the mother of all key inflection points, correlating with the 50 exponential weekly moving average. And we have two interval support price key support levels, major price support levels synchronized with one another on a different dimension. It highly increases the odds for a bounce, if not a very significant turning point if broken right through on a potential backfill to a gap to 1003 price support, down to the 200-day moving average, where bull traders and or long traders would have to aggressively step in, hone in, and challenge to defend that key price inflection point. Technical momentum indicator realm, you have negative and bearish divergences really confirmed on all three technical momentum indicators, with a large price oscillator histogram red candle close below with precision off the 618 fibs retracement, 1995 price support here, really to the button as far as the rejection zone, and with precision that entire trade was good for a 25% crash right off that key inflection point. And undercutting of both price support levels here would put significant damage on the technical momentum indicators, potentially below the zero line thresholds, where you'd need a whipsaw-like reaction, false bear trap, and then a move right back up for a much larger, healthier bounce for long-term investors, dip buyers, and long leap option traders. That key inflection point needs to be defended heavily at all costs. Depending on how bad the damage is by the time we get down there, that would be just a very key inflection point of support in my eye. Again, some of the 236 fibs retracement, I believe, would be the setting stone for it all. You do not want to see an entire move from the beginning of the year completely retraced on a complete backfill of an unfilled gap there. That would just put underlying damage in the long-term daily interval and the weekly intervals as well, the much larger time frames. And it would just be significantly more bearish. Bull traders, long traders need to defend all these key inflection points here, including the 200-day moving average, for a much healthier, more sustained rally, and a re-challenging of this very powerful 1995 price support called the 618 fibs retracement there, challenging of even bigger resistance up above at 2317 price support.